Hello guys, good morning, happy weekend. So guys, in this video I'm going to unveil some secrets to trading in financial market. We all know that the forex trading industry is actually a trending one in the continent of Africa. It has been a very good industry to dive into if you are into anything finance. So I'll be explaining some secrets to trading the financial markets in this video, and it's just know that it's a business and you should also be able to play the games. You should be able to. The only reason why we are into the forex trading business is because we want to maximize profit. So we have to play our role in order to be able to be profitable and stay in business for long. So in this video I'll be sharing some secrets to trading the financial market, and we all know that it's not about your strategy, it's not about how good you are with the charts. What I'll be explaining to us is deeper than all that. It's deeper than psychology, and it's the only thing that should be your backbone in trading. It's the only thing that you should always tilt towards. It's the only thing you should always work to master in trading. So if you do not have this very skill, I tell you, you are just going to be struggling. You are going to be struggling, and I have actually been, in that phase, and I won't say I'm, good. I won't say I'm perfect, but to some extent, and I now understand why forex trading is actually so difficult to some people, and I now know what to do and what not to do. If and only if you can adhere to what I'm going to tell you, you will be profitable. You have no reason not to be profitable with what I'm about to tell you. So just stay tuned and enjoy the video right last. Please subscribe to this channel. It's very important to subscribe so that you can keep watching more of my educational content regarding trading. And again, I would like us to also like where you wish to express yourself. Anything you need to chip in, any thing that is disturbing you, you can also drop it in the comment section. I'll be there to answer it for you. So guys, please subscribe to this channel. I really appreciate. So now let's go on to some secrets. So forex trading is highly rewarding and it comes with significant risks. So it is crucial for you to protect your trading account. So the first one is understanding your risk tolerance. Now, your risk tolerance is how much of risks you are willing to take in your trading journey. Knowing your risk capacity, how much you are willing to sacrifice in your trading account, how much you are willing to let go of, how much you are willing to invest in adding your account size in context of your capital. Yes, so your capital too is key. So personal risk tolerance involves how you are willing to take risks based on your personal financial situation. So this will also help you to be able to decide whether to go hard or to go conservative on a very trading account. Now, your risk capacity, your risk tolerance can also help you regards to your account size, your capital on ground, how much you allocate. So it's all about, in the long run, you see that it's all about allocation. It's all about allocation over time, the amount you allocate. So in investment, it's still about allocations. So when you are into an investment portfolio, you put some allocations in place, and these allocations is what determines your risk capacity. you cannot be so desperate and allocate all your resources to one investment. It is not advisable. So, but you can also allocate how in context of proper risk tolerance, your personal risk tolerance, your risk capacity is also determined by your financial situations. So it is if you know you are buoyant enough to take a particular go on a particular investment, you can actually be able to allocate a proper risk resources to it. So, but if you know you are not buoyant enough, you should be able to you should be able to cut your clothes according to your size. So the first thing I would say is, the first secret is, you should understand your personal risk tolerance, and you should understand your risk capacity. Your risk capacity is the risks you take regarding your trading account. Some people have a $500 account. We have an $100 account, and they'll be using a lot size that is not meant for those trading accounts. The standard lot size that is not even the buying power of that account. In as much as the broker has given you leverage to be able to have a higher buying power, but that does not mean that you should go into a trade once and exit the market in a very short period of time. So the game is to be able to show up. The game is to be able to turn up daily. You understand? It's not, if you have been following, you will notice that I've not been talking about flipping. I've not been a fan of that. I'm only concerned with growing a trading account and trading the right way, trading properly. Life is not all about mastering a very strategy and going all in. It's all about mastering that strategy, yes, and going with proper risk management. So we jump to the second secret. So the second secret is to use a stop loss order. Some people place trade without using stop loss. I'm not saying it's risky. I'm not saying you should not do that. But professionally, when you are trading without using a stop loss, it means when the trade goes the other way around, it means still you are on track and you are not losing more than what you have envisaged to risk in that very, very setup. So using a stop loss order, it reduces and it cuts you from potential risks, potential losses. So it is important to use a stop loss order as a newbie and even as a professional trader. It helps you reduce unnecessary losses, and also you place these stop loss orders where you are comfortable with. These are orders that allows you to be able to implement a proper trading with just proper risk allocation. So a stop loss order also initiates a proper risk allocation. So after doing your calculation and knowing your risk appetite, knowing your risks to a very particular setup, you don't just go all in, and you don't have to blame anybody for taking any loss. If you see you are going to lose XYZ, it should be that XYZ. So the game here, why you are going to use a stop loss order, is for you to be able to revisit. Is for you to be able to revisit and have much more leverage to be able to trade the financial market. You can't just go all in. It's just like a soldier that is on the field and has no bulletproof. So it's not that you don't know how to shoot. It's not that you don't know how to actually fight. It's not that you don't know how to use your rifles. It's not that you don't have the intelligence. You might have everything 100% and you are still exposed. So in order not to expose your trading account, in order not to be like that soldier without a bulletproof, you have to protect it with a stop loss order. You have to wear a bulletproof like the soldier. You understand? So that if there are any external forces coming to him, it's what prevents him, it protects him from a direct injury. You understand? So I call stop loss order, I don't just call it a protective device. I use the layman's word. I call it a bulletproof. So it will definitely help you in your trading career. So let's go to the third secret. So guys, please, hope you are enjoying this very educative content, and please remember to like and subscribe to this very channel. I appreciate. So the third secret is to implement your take profit order. So you hear some traders saying, oh, they were in a very good trade, and suddenly they were holding and holding and holding. Before you know it, it went back to their entry and it went to hit their stop loss. How? Why? Now you should know that it is because it's still a form of greed. You understand? You refusing to take profit in a right place. And these take profit orders, they are not just orders that you place anywhere or anyhow. They are orders that you take in a very level where you are comfortable with, where you feel the market will react from, where you feel the market will get to. But if you are expecting the market to start going in a very particular direction, it means you should be able to allocate what is called time and resources. So there are some trade setup you will see that is very good. It might play out in a month, it might play out in 2 weeks, but the question is, do you have the time, do you have the resources to hold that trade? Now I also want you to be placing take profit orders in regards to how you can hold it and how you can actually wait for the setup to play out. And they are mostly placed in levels of they are mostly placed in institutional levels. You understand? So if you are an ICT trader or an SMC trader, you should be looking for a good supply or demand level as an SMC, or you should be looking for a good buy side or a sell side level, which is the liquidity area, for you to be able to exit the market properly. And Michael, who does ICT King, will tell you that when you are 70% running in profit, you should be able to adjust your stop loss to break even. So that profit should not turn to a losing one. You should be able to take 50% of your partials. So if you're always taking partials from a trade, hardly will you get hit. Hardly will you get stop loss hits. Most times you'll be exiting with break even, and sometimes you will definitely hit profit, hit full profit. So you should also consider taking profit partially or fully when you feel the market has given you enough. But there are some people that greed will not allow them to rest. Greed will definitely set in. They will tell you, they will start thinking of their losses. Maybe if they are in 1% or 2% drawdown and they are running up 0.5%, or they are running up 1% back. Once they are running the profit back 1% or 0.5%, instead of them to log their profit, it happened to me a lot. We'll just leave it to feel that that's the golden trade, and there's no trade that is golden. You understand? So it's the way you manage your risks and the way you allocate your capital, the way you also manage your trade is what is golden. Nothing else is golden. So there's no golden trade, there's no golden. The only thing that is golden is how you can implement your risks, how you can implement your stop loss order, your take profit orders, your risk tolerance, your risk capacity, and also how you can manage your trade successfully. So the next one is position sizing. So I've said this before. Managing your lot size is another secret rather to scaling up in the forex market. It's another beautiful way to becoming profitable long time in forex trading. So managing your position size is another key part. One, you have to allocate a proper lot size. I've talked about that. Now it is popularly said that you must not at least risk 1 to 2% of your trading capital in a very particular setup. So in one trade setup, you should not, like I said, it's not golden, so it's your risk management that is golden. You should not allocate more than 1%, 1 to 2% of that very capital to that very setup. So your allocation too comes to play here. In as much as you have found a very good setup, 100% going your way, but you should also look at your risk appetite too. Your position sizing should not be more than 1 to 2%. It means if you are doing 1:2 and you are allocating 1% of your trading account, it means you should be up 2% after that very setup. If you are allocating 2%, it means you should be up 4%. 1:2, 1:3 is not a bad idea in trading. The next secret is diversifying your trades. So there are correlating pairs that you should also be mindful of. You have to be mindful of every correlating pair in the financial market. So you can't be having two pairs trending against the dollar. If the dollar is bullish, for instance, you are now against you are actually shorting two pairs. It's not reasonable for you to be trading correlating pair of the currency. It is advisable for you to at least have one, that is actually correlating. If you have the pairs that are correlating with the dollar, that are paired with the dollar pairs, you shouldn't be trading two that correlates, e.g. Euro USD, GBP USD. If you are selling Euro USD, you should allocate, you should diversify your trade by looking for something else that is not correlating. Euro USD, pounds dollar, they correlate. So most times when the dollar is bullish, the two of them are weak, they are bearish. When the dollar is bearish, the two of them are strong, they are bullish. So why should you be selling Euro USD and selling pounds dollar? Doesn't make sense. So most times you should also trade pairs that do not correlate, so you can be able to understand and define a proper setup. So you find that the only thing is you can analyze correlating pairs and look for the one that has a good potential of playing out with your setup. Not that you analyze for a pair or bearish and you analyze the correlating pair bearish and you go in. You diversify your trade. You look for something else that is not correlating, or rather you stick to one correlating pair and just play along with it. So always try and diversify your trades. Is very advisable. When you find a pair that is correlating, leave that pair, choose only one, do the analysis, and the only thing correlating pair should do with you is to give you confluences. You understand? At least if a pair is correlating, you should be able to have good confluences to whether this very move, this very trend is actually correlating with this. If it's not, then you should be able to sit on your ends and watch out for what is actually happening. So the next secret is understanding your market conditions. So just sometimes you must have taken everything, done your analysis, proper risk management, and proper risk allocation, your stop orders in place, your take profits, your stop loss in place, and the market condition is not favorable. Now, why? It could be an NFP day, it could be a CPI day, an FOMC day. So when these news are being released, know that the market is very volatile. You are expecting that your stop loss is very tight. due to normally the way you trade and how you expect, how your risk appetite is. So when you notice your market condition, there are high impact news on that very day, what you can do is to adjust your risks. Oh, I don't know the level at which liquidity will be taken. I don't know at the level at which the market will go and correct. So you should be able to plan your trade. You should understand the market condition, and you should also be able to read economic data. You should be able to understand if a very news that is to be released is going to be very volatile or not. You should be able to forecast from previous data to present to now to your predicted data, which is your forecast, your future data that is yet to be released. You should be able to do that, and you should be able to work with your calendars, your trading calendars. You should be able to do that. When you work with your trading, you get your economic news, where you see you follow up with economic news that have been released. All you need to do is study those data and also make sure it fall in line with your analysis. So when your technicals is right, they will tell you that fundamentals will definitely play along with, but most times it will do its own thing. It might overdo, it might, there might be an overreaction, and the only thing that can save you when there's an overreaction is your risks that has been put in place. And when you understand the market condition, you should be able to overcome any obstacle that is in your way. So understand market conditions. So this is another aspect of trading that nobody knows, nobody tells you about. Some people only believe technicals is the king, but they will not tell you that sometimes fundamentals can come and spoil the whole thing. It can come and spoil the whole show. So the thing is, you should work on understanding market conditions. Now, you expect a market to trend when there is a bank holiday. Does that really align? So you should know that, there's not going to be economic activities this day because there is a bank holiday, either for the UK or for the US, or for Europe. Anything there can be, any holiday too that is not making the market trend. So volatility can only happen when a section of the market is opened, either the New York section, the London section, Asian section, which is also the Tokyo section. Anytime this market is open, but if they are expressing a bank holiday, it's very possible that nothing will happen. So it means you have to still practice holding the trade for long, and do not just jump out of the trade too quickly. You have to learn how to also hold trades for more than some required time. Maybe you could decide to learn a swinging style of trading also, so that your the economic activities can also fundamentals can also fall in line with what you are doing. So another thing again, you see the war happening in Gaza, you see the war happening in Ukraine. These are things that affect the economy. You understand? So you should be able to understand that when there is an explosion here, where there is an attack here, it affects the economy. They are not fighting on the air, they are fighting on the land space, and everything is happening to the economy. Everything they are fighting against is not the supernatural, it is all the physical. And you see, in development, population is key, it's part of development. So anything happening to the population to affect the economy. Yes, you cannot have a very strong economy with no population. It's very risky. You cannot have a very strong economy with disabled or displaced population. So it also affects economic activity. So know your market conditions and know it right. The next secret, which will be the last one, is to stay disciplined. You see all what I've listed from the beginning, right from risk tolerance to trade, all that I've listed. It can be easier said, but is it easy to execute? That is where you have to stay disciplined. I can tell you heaven and earth. I can tell you the best risk management strategy on earth. I can tell you a lot, but the thing is, are you disciplined? So discipline again in every walks of life is key. So in trading too, because it's a career and it's a business for you, you have to stay disciplined always and always, because discipline is far better, far off than learning from experience. You learn from experience though, but it's far better than cure. So you don't need to have an injury in your trading account before you start staying disciplined, or before you know from beginning of that trading account, from beginning of finding good setup, you should be disciplined. So you should also practice discipline in everything. You don't have to wait for you to be in 5% drawdown or 2% drawdown before you now start reducing your risks. Before no. Discipline is what is the backbone of risk management. So that's just it. Thank you so much, guys. I love you, and I hope I've been able to educate you and been able to unveil the secrets in trading. And once you implement this style of trading, once you implement the secret that I've exposed right now, I'm very sure your trading journey is going to become smooth and is going to become fair. Thank you so much. I'm still your Doen, and I will remain your Doen till we meet again. Please remember to subscribe to this channel. I really appreciate all your effort, and thank you to my subscribers, my returning and my new subscribers. Thank you so much. God bless you.